Question 681. A. An as a lien. A. Implied promise. B. Easement. C. Homestead. D. Attachment. Correct answer is D. Attachment. An implied promise is an unwritten and unstated understanding that is assumed to exist between parties. It is not a claim against property. An easement is a legal right to use another person's land for a specific purpose. While it affects the ownership rights of the property, it is not a lien securing a debt. A homestead is a legal regime designed to protect a homeowner's primary residence from certain creditors. It is an exemption against certain types of liens, not a lien itself. A lien is a legal claim or right against a property used as security for a debt or obligation. If the debt is not paid, the lienholder has the right to have the property sold to satisfy the debt. An attachment is a legal process by which a court orders the seizure of a defendant's property to secure a potential judgment in a lawsuit. It creates a lien on the property, ensuring that assets are available to satisfy the judgment if the plaintiff wins the case. Therefore, an attachment is a type of lien. Question 682. As a real estate term, devise means A. Testamentary gift of real property. B. Plan a will. C. Testator's signature. D. Notarization of a will. Correct answer is A. Testamentary gift of real property. The testator, the person making the will, must sign the will for it to be valid, but the signature itself is not called a devise. While notarization can add legal weight to a will and may be required in some jurisdictions for it to be self-proving, the act of notarization is not what the term devise means. The process of planning and creating a will is generally referred to as testamentary planning or estate planning. In common usage, devise refers to making a plan. In legal and real estate terminology, the word devise specifically refers to the act of transferring real property through a will. The person who receives the real property through a devise is called the devisee. Therefore, in real estate, devise specifically refers to the transfer of real property by will. Question 683. The elements are required for a contract to be valid, except A. Lawful objective. B. Mutual assent. C. Consideration. D. Recording at county records office. Correct answer is D. Recording at county records office. For a contract to be valid, it generally requires the following essential elements. A. Lawful objective. The purpose of the contract must be legal and not against public policy. B. Mutual assent, offer and acceptance. There must be a clear offer by one party and an unqualified acceptance of that offer by the other party, demonstrating a meeting of the minds. C. Consideration. Something of value must be exchanged between the parties. This can be a promise, an act, or forbearance. X. Legally competent parties. The individuals or entities entering into the contract must have the legal capacity to do so, e.g., they must be of legal age and sound mind. D. Recording at county records office is not a requirement for a contract to be valid between the parties. Recording gives public notice of the contract and affects third-party rights, especially in real estate, but it doesn't validate the agreement between the original parties. An unrecorded valid contract is still enforceable between those who signed it. Therefore, recording is not an essential element for the initial validity of a contract. Question 684. The following are examples of illegal practices by a real estate licensee, except A. Blockbusting. B. Redlining. C. Steering. D. Panic selling. Correct answer is B. Redlining. All four describe illegal and unethical acts. Redlining, the practice of discrimination based on the racial makeup or character of a person's neighborhood, is committed by financial institutions, not individual licensees. Blockbusting involves encouraging residents of a neighborhood to sell their properties at low prices by playing on their fears of a decline in property values due to a racial or ethnic minority influx. Steering is a licensee directing potential buyers or renters to certain neighborhoods based on their race, ethnicity, or other discriminatory factors. Panic selling, while not strictly illegal itself, pressuring a seller to accept a lower price due to unfounded fears or creating a sense of urgency can be unethical and manipulative. Redlining involves denying or limiting financial services, mortgages, insurance, to residents of specific neighborhoods, often based on racial or ethnic makeup. Question 685. An executor of an estate is A. Appointed by the Real Estate Commissioner, B. Not authorized to make any decisions regarding the estate without the prior approval of a probate judge. C. Named in the will of the deceased, D. The eldest heir of the deceased. Correct answer is C. Named in the will of the deceased. An executor is the person or entity named in a will by the deceased testator, to carry out the instructions outlined in the will and manage the estate through the probate process. The Real Estate Commissioner oversees real estate licenses and activities, not the administration of estates. Executors are appointed by the probate court, often based on the nomination in the will. An executor operates under the supervision of the probate court and may need court approval for certain actions, like selling real property. They do have the authority to make many decisions regarding the estate's administration, e.g., paying debts, collecting assets, without prior court approval. The eldest heir may be named as the executor in the will, but it is not an automatic designation. The testator can choose anyone they deem capable to serve as executor, regardless of their familial relationship or position in the line of inheritance. Therefore, the defining characteristic of an executor is that they are nominated by the deceased in their will to manage their estate. The probate court then formally appoints them. Question 686. An exclusive listing is an agreement through which the seller promises to pay a commission regardless of who finds a buyer and the broker promises to make a sincere effort to find a buyer. In other words, a promise is made in exchange for a promise. This kind of contract is called A. Unilateral contract, B. Bilateral contract, C. Seller's contract, D. Buyer's contract. Correct answer is B. Bilateral contract. A unilateral contract involves a promise by one party in exchange for an action by the other party. The other party is not obligated to perform the action, but if they do, the promise becomes binding. In this scenario, the broker is promising effort, not just acting. While the listing agreement is with the seller, the term seller's contract doesn't describe the fundamental legal structure of the agreement, the exchange of promises. A buyer's contract, like a buyer-broker agreement, is a separate agreement between a buyer and a broker. A bilateral contract is an agreement where both parties make promises to each other. In the case of an exclusive listing agreement, 1. The seller promises to pay a commission regardless of who finds the buyer, including the seller themselves in some exclusive right to sell agreements. 2. The broker promises to make a sincere, diligent effort to find a buyer. This exchange of promises creates a binding obligation on both the seller and the broker. Question 687. Prepaid rental listing agents are required to do the following, except A. Return the client fee if no referrals are submitted within 5 days of the agreement's execution. B. Provide a contract and receipt for every potential tenant, promising the return of their fee if certain circumstances are met. C. Submit an account statement to the Real Estate Commissioner on a quarterly basis. D. Refund any funds over $25 if a rental is not procured. Correct answer is C. Submit an account statement to the Real Estate Commissioner on a quarterly basis. A PRLS helps people find rental properties, and they often charge a fee up front, prepaid. Because they handle these fees before a tenant finds a place, California law has specific rules to protect those seeking rentals. The question asks which of the listed actions is not something a PRLS is required to do. Here's a look at each option. A. Return the client fee if no referrals are submitted within 5 days of the agreement's execution. While a PRLS is expected to provide timely referrals, the law doesn't typically mandate a full refund just for not giving referrals within the first 5 days. Refunds are usually tied to whether or not the tenant actually finds a rental. B. Provide a contract and receipt for every potential tenant, promising the return of their fee if certain circumstances are met. This is a requirement. PRLS must have a written contract outlining the services, the term of the agreement, and the conditions under which the tenant can get a refund. They also must give a receipt for any fees paid. C. Submit an account statement to the real estate commissioner on a quarterly basis. This is not a standard requirement. PRLS must keep records of their business and how they handle client funds. And these records must be available for the real estate commissioner, now the Bureau of Real Estate Calbray or DRE, to inspect at any time. There isn't usually a requirement to proactively send in a quarterly account statement to the commissioner. Instead, they are expected to provide reports to their clients, the potential tenants, about how their funds are being used. D. Refund any funds over $25 if a rental is not procured. This is a requirement. California law limits the non-refundable fee a PRLS can keep if the tenant doesn't find a suitable rental through their services, often setting this limit around $25. Any amount paid above that must be refunded to the tenant. Therefore, the action that a prepaid rental listing agent is not typically required to do is to submit an account statement to the real estate commissioner on a quarterly basis. Their financial records must be available for inspection, and they should provide reports to their clients, but a routine quarterly submission to the commissioner is not usually mandated. Question 688. Which of the following is not an essential element of value? A. Utility. B. Expectation. C. Demand. D. Scarcity. Correct answer is B. Expectation. The essential elements of value in real estate are often remembered by the acronym DUST. 1. Demand. There must be a desire and ability to purchase or lease the property. 2. Utility. The property must be useful and satisfy a need or want. 3. Scarcity. The supply of the property must be limited relative to demand. 4. Transferability. The property must be able to be transferred from one owner to another with clear title. Expectation refers to the anticipated future benefits of owning the property. While anticipation influences value, it is not typically listed as one of the 4 essential elements of value itself. It's more of a principle that underlies value. Therefore, expectation is not typically considered one of the 4 essential elements of value in real estate. Question 689. For the purposes of income tax, an owner's investment in a property is called the A. Taxing benchmark. B. Basis. C. Standard. D. Undivided interest. Correct answer is B. Basis. While the basis serves as a reference point for calculating taxes, taxing benchmark is not the formal term. Standard is a general term and doesn't specifically refer to the owner's investment for tax purposes. Undivided interest refers to a type of ownership where multiple parties have a share in the entire property, not the owner's initial investment. In the context of income tax, an owner's investment in a property is referred to as their basis. The basis is essentially the original cost of the asset, adjusted for certain items such as improvements, depreciation, and other factors. It's used to determine the taxable gain or loss when the property is sold or otherwise disposed of. Question 690. A. An is a voluntary conveyance of the right to maintain land in its natural state. A. Conservation easement. B. Solar easement. C. Easement in gross. D. Zoning variance. Correct answer is A. Conservation easement. Conservation easement is indicated as the right answer, based on the question's reference to keeping land in its natural state. Solar easement grants the right to use a specific property for solar energy collection, not necessarily preserving the natural state. Easement in gross is a broader legal term referring to a non-possessory right to use another's property. A zoning variance is a permission granted by a local authority to deviate from existing zoning regulations for a particular property. A conservation easement is a legal agreement between a landowner and a qualified land trust or government agency. The landowner voluntarily agrees to restrict development or use of the land in a way that protects its natural heritage, scenic beauty, or ecological value. Through a conservation easement, the landowner retains ownership of the property but gives up the right to develop it in certain ways. Conservation easements are a valuable tool for land preservation and can offer tax benefits to the landowner.